Okay, so an easy way to start analyzing the market from scratch for any person who can understand. So I'm on the daily time frame. So the market is seeking two things: liquidity and the orders. What are the orders the market is seeking? I've seen here there is a fair value gap here that I've drawn here. Fair value gap is called FVG in short form. So what are the validity of a fair value gap? Number one, the fair value gap should be unmitigated. Number two, the fair value gap should have a next break of structure or change of character. Number three, fair value gap should stand out. You can see and spot. We can call it unmitigated. Yeah. Now, a fair value gap. That's I'm giving a definition of an order block. No. I think I've just given you three reasons of validity of a fair value gap. You'll work on it and do it research on your own. Now, after doing that, I'm seeing the market has taken this high. Is it really the high? It has not taken the high. Anyway, it's okay. It has not taken this high. So, it has taken the other day's high. Are you seeing the narrative? Are you seeing my narrative? So that means the liquidity, is it the sell side or buy side liquidity has been taken? The buy side liquidity has been taken. What is this what that I normally say that liquidity is each and every day? Liquidity, it's money. Let me pick one person here. Pick Peter Oloch. Let me pick of you. So naturally, if you see this market from here, let us assume this daily candle is not there. And you have only these two candles. Personally, you can be opting to buy this market. So if you are buying this market, well, be your stop loss. Stop loss will be down here, is it so? And take profit will be above this point. But what did the market do? It came and take what? It came, never hit your take profit, and is taking your stop loss. So liquidity is money. So it's picking those stupid people in the market that don't know what they're doing. Are we together? Are we together? Sorry to say that. Are we together? So after coming there, I'll come to H1. Daily time frame normally plays well with H1. So at H1, what am I looking? By the way, I'm looking again how the market is moving using the same scenario on the daily time frame. I'm not seeing a nice move there. Let me go to H4. At H4, I'm seeing this, an uptrend. This, those using trend line, they will tell you this. If the market breaks the trend line, this is called LRLR, low resistance. It's low resistance liquidity. I'll tell you the meaning of this line. That means there is a low resistance at this point. There is forming equal liquidity at this point. So those using trend line, they'll wait this market to break and retest and start doing what? And start selling this market. But you as a trader, will you just use that kind of guesswork and start making money? The answer is no. But after identifying this, I'm seeing a break of structure here and an uptrend. How does the uptrend move? An uptrend is where the lows are respected and the highs are broken. But what did the market do here? It disrespected the low. So what does this tells you? That this market is trying to communicate to you that this market, from the daily narrative, it is selling. Now it is coming down to H4 or H1 to give you a narrative that, my friend, we are going down. We are not selling this, we are going down. So after seeing that, do you need a ticket to start buying this market or looking for buy confirmations? The answer is no. You have already the ticket. Come to 15 minutes or 5 minutes and look for your entry confirmation wherever you are learning from. Your entry confirmations. Then start making money from this setup. So where will be your take profit? Take profit can be the previous day's highs or low. The previous days, the other day, you can take here as your take profit, or the other one, or look where there is a point of. By the way, I was to tell you something, but is it necessary? The point where you can take your take profit 1, take profit 2, take profit 3. We have specific points where liquidity is. There is a point where liquidity lies in the market. That's a story for another day. There's a point where liquidity lies, where the market will come and take liquidity from that point. Exactly. So after identifying the market like that, go back to the low minute time frame at M15, identify your entry, and I'm seeing this, it has already started selling significantly. Then you can't wait selling from this point, because this has given you something here. It has given you a confirmation at this point, this volatility 10-1s, and I think I entered the trade at this point here. I think it was where, let me see at H1, it was this point here. Yeah, here it came and I moved out from this point. For those who waited, they made some partials. So that's a simple way I can help you to analyze the market. Have you seen here an indicator? Now let me go to volatility 50. Volatility 50, in a simple explanation on what I normally tell you that is simple. Come to the weekly. What are we seeing in the market? The market is buying. Look at the last 4 candles, the last 4 weeks. The market is going upside. Kindly look at how the deriv is doing to people. Look at this week. This candle. Imagine if you could have seen this point. What could have you done? You could have been pumping more cells. Look at your losses. So that's how the deriv normally do. That's what the deriv normally do. Very, very, very much manipulation in the market. And that's why if you can find a Kenyan trader trading volatility and is making money from that, at least pick at least even 5. Then come and tell me we have this and this and this. Because it's very simple and very hard for you to know this thing. Because volatility you can trade with even $2, $10, $5, 15, 20, and make some money. But think of currency, $2, $3, it will show you some dust. But here you can do it. So look at how this thing has done. You are seeing rejection at this point, this weekly. So this is how it is very manipulative. Now, let me go to the daily. Now that is a buying market. So I look for a buy side liquidity. I saw this, the previous candle and the other candle. In fact, I was not buying this. I was not trading this volatility V50. I was waiting for a retest at H4. I saw the market at this point. It came to my, at the other day, I saw liquidity taking place here. It took a lot of people out here. And another point is that there is a fair value gap at this point. After having a fair value gap at this point, and you guys, I normally teach you for free, guys. Why can't you even buy me even supper? I'm broke now. My number remains the same, bana. You Kenyans, bana. In fact, I have my friend here. naye sana, the guy just calls me and tells me something that, oh, we need this and this. I need nyinyi wa Kenyans, stop behaving like William Ruto. Sorry to say that. Be humans. If you borrow someone's money, return. Anyway, so I saw a fair value gap at this point paired with liquidity. So this explained to me that this market will be a nice buys. So I'll be looking for buys at this market. So I saw liquidity that has been taken there. Then I said, nice. Now, this was yesterday. Yesterday was on a Wednesday. No, Thursday. Yeah. So I waited the market. Today, I just saw this market coming back to my point of interest here. And I saw this is a BPR. BPR, I don't know if you know BPR is what. BPR is balanced price range. By saying balanced price range, I mean the fair value gap is being like they're together on the left and the right side. So it's another point. Point number 3. You have a BPR. So what will I do in this market? I'll wait this market to come to my point and go to H1 and look for something. Then I do what? I start buying this market. Simple. If it comes to my point here, that's what I normally trade. Sina siri ingine mimi. Sina siri ingine. I have no any other secret. I've given out all the secrets. So, but if you want detailed thing, is where now you can join my mentorship. In fact, then kuna offer. Very, 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 very affordable amount. Pesa kidogo sana nyezi lipa ya BNB hapo Mirema hapo ama huko Roysambu huko iwezi. Pesa kidogo sana. So that's what I normally do. I have no anything to add or subtract in this thing. Unless if you want detail, is where now you take my time and I give you my knowledge kinda. By the way, I normally speak from, I've been doing this thing, I've been learning this thing for long. Sana! And if I could have gotten someone to teach me how he was teaching me from last year, wallahi, I could have been making even 5,000 US dollars. Per week, even per week, yeah. Because what I'm seeing how things are boiling up, we'll be making this, yeah. Just relax and wait. Time will tell. Time will tell. Time will tell. So that's what I have for now. I have nothing to add or subtract. Unless you have any question. Any question?
Yes, yeah.
Yeah.
So, you have that.
But Adi, ask your question again.
Okay. I'm not even sure.
Fair value gap, huh? See, it's among the orders that the market must respect for it to. You normally ask yourself, we were taught on our theory. They normally call what? Those baby pips and those stuffs. That the market will come and respect the fair value gap. Are you together? You are taught something like this here. Like this is a fair value gap now here. So you need to ask yourself, why is this market not respecting this fair value gap? Am I wrong or what am I doing? Relax. Take your time and do research on your market. We have the hidden treasure in the market that you need to unlock the treasure. This market you're being told that the market will come to this fair value gap and respect the fair value gap. Here, look at this place. That if the market will come to this fair value gap, it will do what? It will sell. But look at how it has done. Showing you dust. But what I can tell you is, and I began by saying that have a narrative. I'm tired of giving you setups and I had one of the students in the other group. He made a lot of money just with the setup. He was selling volatility 51s. In fact, he made almost $70. Simple arithmetic. Fair value gap is valid when it meets its validity. Fair value gap is valid when it meets its validity. Fair value gap should have around it, they should have a market structure showing up. You know the type of market structures, you know them. It should have something of market structure around it. It should be unmitigated. By saying unmitigated, let me teach you now for free now. Now that you join to learn for free. Unmitigated, I mean this. It should stand out. Like here is mitigated. You're not seeing any nice here. Here, it is mitigated here. By saying this is like it's not having any of the space around it. Like it's not having room for breathing. But at this point here, the fair value gap is having room for space. The 3 candlestick. Anyway, it's okay. Are you seeing what I'm trying to tell you? Now, we have types of fair value gap. We have types of fair value gap. There are many. I'm sure wherever you learned, you never learned types of fair value gap. It's okay. We have BPR, balanced price range. So, and we have, I think, is Sharon around here? Sharon, are you there? We have another type of fair value gap called volume imbalance. So, if you spot that volume imbalance, it is a very, very, very reactive place where you can just sell or buy from that point. I don't know if I can find it. One here. I don't know if I can find. I'll be looking for that. I'll give it to you. I'll share. I don't know if there's some point you've seen on the chart. We have some space between the candlestick. We have a bigger space. Like we have a space between. Let me pick of this as my candlestick. You have seen something like this. Then this candle was just selling. Then all of a sudden we have a space. I don't know if you're always keen on the chat or you're always keen on TikTok looking how people are making money and having food on the table. I don't know. Have you ever seen something like this? Candlestick, there is a space. I don't know. Am I talking to you or you have just switched to weekend mode? I'm asking, in your free time while you are perusing on the chart, have you ever seen a chart like this? There is a candlestick, and this candlestick, the way it was selling, it is a space between. There is a space between the wick. There is a kind of small space. I'm not seeing one. I don't know. It normally happens on the jump. I don't know if there is on a jump. Let me see one. I'm not seeing one. If I can get one, I'll show you. So remind me anytime, any day. If I see one, I'll screenshot and share to you. I think it's kind of this one. Are you seeing this point? Where is it? Something like this here. I think it's not showing on well. There is a kind of space. You can see some candlestick and there is a space, like a centimeter space here. That's another type of fair value gap. So it's called volume imbalance. Then we have the inversion fair value gap. Inversion fair value gap is the opposite way. You can call it BPR. We're together. So go out and work on yourself and know what are you learning trading. If you are learning of moving average EMI, okay, it's okay. It's a long way to go, but choose the best way to town. Are we together? So it's upon you to do on that. So that's what I have for now. Unless you have any question, you can ask. I'll answer you anytime from now. If you have any question, but then I normally give you homeworks you have never done. Mostly, you never done. You never just, I normally expect I have 4 people to help those 4 people, and there is ending. I normally expect at least someone can come and tell me, you told us to learn about this order block. So this order block, I've seen this and this and this screenshot. I'll see, and I say this guy is doing good to him or herself. Then I can just speak you to my mentorship students, bana. Me, I want someone mwenye anajituma. You can't be just coming here because people are joining that you want to make money. No, this is not an easy, quick, rich scheme. This is a hard, quick, rich scheme. Trading, people join trading because you can achieve what you could have achieved in 30 years in 3 years. What you could have achieved in 1 year, you're doing it in 1 month. So most people run in trading to make money, easy money, but they find that it's not an easy money. They quit. Are we together? So that's how life is. Only the few will survive. And mimi naambianga msei, let us meet at the top. At the top where the few people are. Are we together? And let me tell you for free. These top politicians, they normally trade. These celebrities, they trade. I was surprised having seen Abel Mutua wearing the Dcash t-shirt. Dcash, the logo of the blue Dcash, the blue purple. And ask myself, you mean these people normally trade? For example, if you are in a matatu or in a car and you see someone with the MT5, you can be very curious to know, hey, is this a beginner or a continuation? Yeah. So I was great to see Abel Mutu wearing a t-shirt with the logo of Dcash. Then I was surprised seeing this guy from this politician. It's called this guy Uria from the Kenya Azimio side. This guy normally speaks a lot. I don't know the name. You know him. He trades, bana. Time of vetting, he said, I'm a trader. I was surprised. So these people that are trading, and then another point, the son to Prezo, he trades. So when you are there doing your job, you are saying I'm employed, coming out in the plot, showing others that you are making money, you are being paid end month. Think very twice. Think very critical, because if you are using your hand to make money, if you are using your maybe your leg, you can be fired. Something can happen. At the end of the day, look for something. Look for a skill. Trading is there. Learn it. If you have the knowledge and your hands are not there, you can use it to, you can pay someone to be trading for you and doing something for you. So take time and think of yourself. That's what I have for now. There being no any other question, wish you well in the trading career.